Thanks to the Gamestop story, many of you will now be familiar with the short squeeze phenomenon. Basically, when a shorter of a stock starts making a loss, they often cut their loss to save their neck, and when there are loads of them, they start panic buying, thus potentially sending the stock price
to the moon!
One of the biggest of all time was with VW. The auto industry was in all sorts of trouble, as were many companies during the financial crisis of 2008. Stepping Porsche basically ended up buying 74% of VW shares, which decreased the overall float of shares. They then issued a warning to the short sellers, and boom, this is what happened. VW became the most valuable company in the world, and Porsche got the name the hedge fund who also sells cars. More recently, it was the GameStop short squeeze that made the news headlines. GameStop at worst had 141% short interest float. The Wall Street Bets crowd on Reddit jumped on this, and notably a YouTuber named Roaring Kitty. The stock went up by thousands of percent in just a few weeks and over 10,000% within a year, then promptly most of the way back down. The battle continued and still continues. Hedge funds lost billions of dollars. It became so high profile that they even made a Netflix series on it. So now we know that some people have made a killing out of this. The question is, where on earth do we find these stocks before they pump? How can I retire by the end of the month, and what would I spend all my money on? We could take ages manually calculating the short interest as a percentage of float, or, luckily for us, there are a few sites that have done the dirty work for us. Firstly, FinViz is one that many YouTubers seem to use. However, you can only search by a greater than 30% short float with the free version, so you're going to have to flick through all these search results to find the next big squeeze. However, a few sites have made it a bit easier. The suitably named highshortinterest.com literally does what it says on the tin, a tidy list of stocks by short interest percentage. Perhaps we can now see why Faraday Future Intelligent Electric is creating a bit of interest at the moment. Market Watch also has a page with a similar layout and a few more handy stats. Benzinga does too, with an included handy stat called Days to Cover. What's interesting is that the various sites have a different figure for the short interest percentage, and I didn't really get why they could be so different. I accidentally asked this to Bing's Copilot, and its answer, including different reporting times, data sources, and calculation methods, seems as good as any. The main point here is that you need to buy all of the top stocks on each site and all of the meme stocks you see on social media, because the internet never lies. Okay, that was a joke. Please don't. The main point is actually that if you are considering investing in these companies, this is definitely only the starting point of your research. I best point out now, before someone loses their share, that this is not financial advice. Trading of these stocks is extremely risky, and highly shorted stocks are often backed against for a good reason. They're often not in great financial shape, so could quite easily go bust, with investors not getting a penny back. Thanks for watching and subscribing. Let me know your thoughts in the comments section, and see you next time.